Welcome back. Flashes from Vodafone Idea call running for you at the bottom of the screen. If there's anything pertaining to the tariff hike or the utilization of the equity raise, we'll flag it out for you. But continue keeping an eye on that because they are talking to a consortium of banks with respect to management of debt as well. But in the meantime, Sansera Engineering had come out with a good set of numbers. Let's speak with Mr. B.R. Preetham, the ET and Group CEO, to talk to us about the way forward. Mr. Preetham, hi, good to be speaking with you. Let me begin by asking you the outlook for FY25 because in the year gone by, you managed to report a 20% growth on the top line with the profitability being close to 190 crore. As we look into FY25, what kind of growth, margin and profitability targets you have set for yourself?
Hi, and thank you for having me on your show. We've had, as you said, that we have had a good year, very consistent across all the quarters. And if you really look at our order book is also very, very strong. And we also expect, two-wheeler industry this year to do much better. So considering all these factors, we are poised to again grow by a very similar percentage. And we've always maintained that we would grow much higher than the industry, and we will continue to do so.
Mr. Preetham Jushell, joining in the conversation, and you did say that you have a robust or a healthy order book also, and also your order book for the new business is around 1,590 crore rupees thereabout. So if you could tell us, how much of an increase are you going to expect for FY25 when it comes to your order book? And also if you can share some timeline on the execution of the orders?
Yeah, this order book, generally what we have been practicing is that every beginning of every financial year, we reset the order book. At the end of March 2024, our order book was around 2,200 crores and about 600 crores of that has been moved into the production. Whatever components have started mass production, so we have moved it. So we reset it on the beginning of the business year, and now it stands at 1,600 crores approximately. And this means that this has a potential of an annual peak revenue of 1,600 crores. And generally in our kind of business, a full maturity happens of this order book in 3 years. So we could expect on the third year a full maturity of this business, which would get added to the current run rate.
So the order book is 1,600 and is expected to be executed over the course of next 3 years. But break it down for us in terms of the ICE vertical, the EV vertical, as well as the non-auto business. What are the various growth levers in each of them? What kind of growth trajectory do you expect, and what could be the split going forward in terms of the revenue contribution then?
See, over the time that we have been actually reducing our dependency on auto ICE, a couple of years back when we started this journey post our listing, it was only about 17% of our business was from non-automotive and XEV and tech agnostic. As we speak, last year we have exited with about 26% of our business coming from these sectors. We have set a medium, in a medium term, this would go up to about 40% of our business overall contribution to revenue. And if you really look at our order book, almost more than 50% of our new order wins have been coming from non-automotive and tech agnostic and XEV segment. So this is a very strong indication that we have been growing, and that too on a much higher revenue base.
Right. Let's talk more about these segments then. One of the auto tech agnostic as well as XEV segments. How are the margins for these segments? Are they better or at par of what the company has reported at the group level?
Tech agnostic, non-automotive and tech agnostic predominantly today are on our exports business, while some of the tech agnostic components have also started going into premium sector of vehicles. So this only means that this commands a higher percentage of margin compared to our normal domestic business. But having said that, since it's a new technology for us, because most of it is in lightweighting space in aluminium forged and machine category, so these tech agnostic set of components also require some more optimization in our production levels. While the design margins are bound to be higher than our normal company level margins, but it would take some more time for us to reach those optimized levels.
Question, Mr. Preetham, before I let you go. Last year, there was, of course, a large deal where a couple of PE partners had sold some stake. Anything lined up in the coming year from CVC, IGP or Bean Limited?
I really can't answer on their behalf, but both of them combined together still hold around 11%. So I'm not the right person to answer on their behalf.
Preetham, on that note, we'll let you go, but at least from the business point of view, you talked about how FY25 growth levels will be similar to FY24, and margins are also something that you're working to improve a little more. So that's the latest commentary coming in from the management. The stock holding up quite okay. But overall, the market has been holding up quite okay for now. Let's see whether we head to that 22,500 level or not. We have just been 20 points shy. And Naresh, it's been a very sticky range. I mean, if you look at the last 4 hours, we've been going towards that 22,500 and being shy of it just by 10 to 15 points.
So it's better than the volatility which we are seeing for the last 3-4 sessions, wherein we would see a 100-150 pointer cut in 10-15 minutes, a similar 150 pointer rise. So that tells you market is normalizing, getting into the elections. The volatility is getting digested and the trend is up. And if you look at the breadth, it's clearly up. You have mid cap index at a new all-time high. You have mid cap selected an all-time high. And small cap is also getting closer to an all-time high. So the breadth, the momentum is still strong.
All right, the market breadth, the momentum is still strong. And Kunal, yes, no doubt we are at least not seeing the volatility that we've been seeing over the past few trading sessions, which is a good sign at least for the markets. But what about the specific sectors that are actually participating? Auto definitely in forefront, all thanks to what's happening to Mahindra & Mahindra. But how is the sector looking to you?
So I think it's usually the same, because I think other than auto stocks, you have the PSU names which have been doing pretty well. That's another sector which has started to show signs of breakout. So within auto stocks, it was limited to M&M initially. Now you have the likes of Maruti, TVS Motors. These stocks are making a comeback for themselves. Ashok Leyland is also looking attractive in that sector. So there are many new fresh names which have started to spring back into breakout mode and ending their corrective phases. So I think that's another comforting sign. PSU overall, PSU as a pocket has done exceptionally well, and the bounce which you've seen in the last 3-4 trading sessions for the indices, the magnitude of bounce for the PSU stocks has been much more higher. Railways again as a sector which has done pretty well for itself. So I think these are the usual sectors which have been doing pretty well, and that's where I believe one should probably try and focus.
Okay, point taken. So that's the view coming in on the top sectors right now. But time now to slip into a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of the trading session. But it's not the last 30 minutes of the week, because you do have to work tomorrow. There's a special trading session which is lined up. The timings, etc. will come up for you on the screen. I think the first session starts at 9, which is going to be the pre-open. And the actual will start at around 9:15. And the second session starts around 10. All those details will come up for you on the screen shortly.